European and UK stocks, the euro and the pound are stronger ahead of key British and French election results. Markets are quiet, with the US on an Independence Day holiday, ahead of key US non-farm payrolls jobs figures tonight. And strong iron ore exports can't stop Australia's trade surplus from narrowing. That's coming up in our 5 Things in 5 minutes. And then in our bonus deep dive interview, ANZ Head of FX Research Mahjabeen Zaman looks at the potential effect on markets and the euro of the possible results in Sunday's French elections.
With a hung-up parliament, it will be quite difficult to implement policies, hampering the government's ability to tackle the country's budget deficit and debt.
But first in 5 and 5 with ANZ. European and UK investors are in a good mood ahead of key election results due in the next 72 hours in Britain and France. UK and French stocks rose almost 1% overnight on hopes for more political stability. Polls show a Labour landslide is expected to be confirmed in the UK in the coming days, while a poll in France suggests the far-right parties won't get a majority in the French Parliament. The pound and euro are up around 0.2% as of 5 a.m. Sydney-Melbourne time. But it's US non-farm payrolls figures that will drive markets tonight. ANZ economist Pansy Madhavani says this morning from London, jobs growth of 190,000 is expected in June. It's down from 272,000 in May.
The payroll gains have been trending lower, and they are now moving closer to the 155,000 to 160,000 pre-pandemic level. Continuation of this trend lower will affirm to the Fed that the labour demand is cooling off. It's important to note that both Chair Powell and the FOMC's meeting minutes highlighted that any undue weakness in labour market will prompt the Fed to respond.
As of 5 a.m. Sydney-Melbourne time, the Aussie dollar is up 0.35% at 67.27 US cents. And the New Zealand dollar up 0.25% at 61.18 US cents. Number 2, Australia's goods surplus fell in May as a 3.9% increase in imports outpaced a 2.8% rise in exports. ANZ economist Maddie Dunk says exports of iron ore strengthened, but that was offset by a 2.4% rise in consumables imports.
And they have actually been reasonably strong, suggesting that we are continuing to get imports in. In particular, we did see a rise in imports from China this month. It was up around 13%. But you wouldn't want to read too much into that. We know from the retail sales data that households are finding it's a pretty tough time right now, and the underlying pulse of consumption remains weak on a per-person basis in particular.
Number 3, inflation data is due out in Thailand later today and is expected to show annual CPI inflation falling to 0.8% in June. That's below the central bank's 1 to 3% target band. ANZ Asia economist Crystal Tan says that implies a monthly fall in prices.
If we look at high-frequency data, we do see lower raw food prices, especially with vegetables, leading the way thanks to more favourable weather conditions. Energy prices likely fell too, as higher diesel prices were offset by lower gasoline prices. As for core inflation, we think that stayed soft. Our forecast is for a print of 0.44% year-on-year.
Number 4, we also get CPI data out in the Philippines today, where annual inflation is expected to be unchanged at 3.9%. ANZ economist Arindam Chakraborty says food inflation is set to be flat after rice prices softened in June. There's also future pressure being taken off by the government's reduction in import tariffs on rice from today.
Even though the rice inflation will have second round effects and we expect it to lower overall inflation in the coming months, we still think the BSP will have to wait for inflation to sustainably move towards the midpoint of the official 2 to 4% range before it can start cutting the policy rate.
Number 5, and Taiwan's annual CPI inflation is expected to remain at 2.2% in June. Bunsey says the lingering impact of electricity price hikes and high food inflation will continue to show through.
We expect inflation pressures to remain somewhat sticky in the next few months before moderating later in the year. The CBC will keep an eye on inflation trajectory and households' inflation expectations. We expect the CBC will keep the policy rate on hold, but it will remain on guard and be ready to act if inflation pressures do increase.
Pansy Madhavani there. Now, in our bonus deep dive interview ahead of the second round of the French parliamentary elections on Sunday, I spoke with ANZ Head of FX Research, Mahjabeen Zaman, last night, and she outlines what the potential results could mean for markets and the euro.
I think the recent moves by the centrist and the left parties to withdraw candidates have been designed to consolidate opposition against the RN to prevent it from gaining an absolute majority to the second round elections this weekend. So maybe the possibility of a hung parliament could be one, as opposed to absolute majority by the RN. We'll have to wait to see.
And what is the potential outcome that could have the most impact on financial markets, both the euro and perhaps the debt markets in Europe?
So I think we take we look backwards to see what the reaction was to the first round, which took place last weekend, where the National Rally or the RN party dominated, with the New Popular Front coming in second, and then President Macron's party came third. Now, the market reaction to that has been, I would argue, a little bit more positive than pre-first round. The euro has rallied against the dollar and the Swiss franc. We also look at the OAT and Bund spreads, which are the French government bonds and the German bonds, to see, that had widened well ahead of the first round. They have narrowed slightly. So I think some of the political premium has unwound post the first round.
And if there is a surprise result and the RN becomes the biggest party in the parliament, what should we watch out for in markets then?
I guess Jordan Bardella would then become Prime Minister if there's an absolute majority, and then he would likely share governing responsibilities with President Macron, who's going to be around till 2027. And I think this would likely have a little bit of a negative impact on the market because it would bring high uncertainty around the fiscal plan. However, I guess, if you have a hung parliament, it does not come without its challenges as well. But, I think with a hung parliament, it would be quite difficult to implement policies hampering the government's ability to tackle the country's budget deficit and debt. But we do think that this scenario would still see a slightly better outcome or market reaction than the absolute majority. And I think that's what the market looks to be somewhat pricing in. So a high euro, narrow spreads on the back of that.
And at the same time, the European Central Bank is doing its inflation fighting business. How might all of this political uncertainty factor into how the ECB is thinking about the next few months?
I think when we look at the euro, we need to separate the political risk premium, which we just spoke about, and look at exactly the ECB. And I think that will also matter. The macroeconomic recovery in broader Europe also matters to the euro. The ECB raised inflation forecasts at their last meeting in June. That tells us that they do think that, maybe inflation will remain a little bit higher for longer. So, we don't expect an aggressive easing cycle from them. They've already eased once. We're expecting 2 more rate cuts. If they kind of continue to progress on this data dependency path, and, market expectations are also roughly around 2 rate cuts, I think if we kind of stay at this level, if anything, we continue to be a little bit more optimistic, the euro, unless they become suddenly extremely dovish, which we're not expecting.
Mahjabeen Zaman there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Friday, July the 5th. Catch you on Monday with detail and reaction from those non-farm payrolls figures and the results in the UK and French elections. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.